Hey everyone, Daniel here and welcome back to another video. I hope all of you are having a great day out there. As always, here today we have 3 stocks to talk about that in my opinion have a lot of potential over the coming months and over the coming years to really outperform the market in a major way. And all of these stocks are trading at relatively cheap valuations, are growing significantly, and are in sectors that are growing significantly on top of that. So if you end up enjoying this video and finding some value in it, please consider subscribing. Without further ado, let's get into the video here. So first and foremost, we have HITI. This is my play on the cannabis industry. They're primarily focused on the Canadian market at this moment in time and recently uplisted to the NASDAQ exchange, trading under ticker symbol HITI. Now, HITI is focused on a variety of different businesses. Currently their main business is retail, brick and mortar locations within Canada, focusing on their Canna Cabana brand and their Meta Cannabis brands. Again, all throughout Canada and continuing to expand throughout Canada over the coming years, but they also have a major e-commerce presence through a variety of different stores like Grass City and Smoke Cartel and Daily High Club. Now, High Tide growing revenue significantly, trading at a ridiculously cheap valuation, which we'll take a look at in a moment here. All the things are clicking for this business, and I think it has a lot of potential moving forwards. Now, High Tide, this is a business that just reported earnings, actually just yesterday after the bell, their second quarter 2021 financial results. And again, their second quarter finishes at the end of May. Something important to note, 99% increase in revenue, record adjusted EBITDA of around $5 million. Now, diving in a little bit deeper here, we can see that they reported revenue just in and around $41 million. For again 3 months ended, April 30th, not the end of May. Their second quarter finishes at the end of April. Something important to note, again, compared to around $20 million in the same quarter last year. Gross profit also increased to around $15 million, up 93%. Now, gross margin did decline a little bit. Keep in mind, when it comes to High Tide, I think margin expansion will come over the coming months and over the coming years. As Canada does open up, when compared to the United States, Canada is behind when it comes to COVID-19, especially Ontario and, potentially Alberta, which are their primary markets. Still, a majority of them are locked down, and I think that makes High Tide not only a growth play, but potentially even a recovery play moving into 2022, where as things open up, their stores will be able to thrive at full capacity when right now they've been shut down for a majority of the year. So that's, for High Tide to continue to maintain this high profitability and continue to have this very high revenue growth, that is a very good sign, especially moving into 2022, where we can expect, margin expansion and an increase in revenue due to more foot traffic in their actual locations. Now, on top of that, High Tide is a business that is becoming more and more vertically integrated by the week and by the month when it comes to their actual physical locations. Sure, they get a lot of their products from third parties, but when it comes to their cannabis accessory products with their e-commerce presence, that is all made in-house, or at least a majority of it is made in-house. They're also focusing in now on a CBD style e-commerce cannabis store, so that's all of your cannabis gels and lotions and vapes and other things along those lines. But when it comes to that store, High Tide, or rather that online store and that online presence, High Tide recently acquired a company that actually manufactures different CBD products at very high margins. So what we're going to see is High Tide over the coming years here expand their presence when it comes to CBD products and actual cannabis products to where they're actually manufacturing them themselves. That will help increase margins and, again, continued expansion in e-commerce presence, which has higher margins than their retail physical locations, which we'll take a look at in a moment here. Now, I highlighted this adjusted EBITDA here because in reality, when we look at their net income, they did report a loss, which we'll take a look at in a moment here. But again, High Tide is a business that's growing significantly, and I think the time for profitability will be in the back half of the next 3 to 5 years here, as right now they're focused in on growth of their physical locations and their e-commerce presence. Now, geographically speaking, around $35 million of their revenue is earned in Canadian, or rather in Canada, and around $5.7 million in the United States, $200,000 internationally. Now, talking about this revenue structure, it's all in Canadian dollars. Keep in mind, High Tide is a Canadian company. Some something important to know when we look at this. So next, cash on hand now totaling around $30 million compared to around $7.5 million as of October 31st, 2020. Now, HITI did raise some money over the past couple of months here through raising. They also acquired a few companies. Their balance sheet is actually in a pretty good place right now. So nothing bad to speak about here. Raj Grover, the CEO of HITI, makes a little bit of a statement here, again, just reiterating some of the things we just looked at. Some of their operational highlights, not too much to talk about here, just some interesting facts about the business. Acquiring Smoke Cartel, again, one of the biggest e-commerce businesses when it comes to actual cannabis accessories, over $23 million of debt, converted into company's common shares, oversubscribed bought deals, so again, raising money through financing and whatnot. Company launched the sale of hemp-derived CBD products on Grass City, again, very important, expanding into much more than just cannabis accessories, reducing the interest rate on their debt, around $800,000 in sales on the cannabis holiday, April 20th, 420, base shelf prospectus in the amount of $100 million, again, allowing them to raise money easier moving forwards. And the company opened 13 cannabis retail locations under the Canna Cabana and Meta banners, 5 in Ontario, 8 in Alberta, again, continuing to expand their physical presence when it comes to their retail locations. And this is something that I really like. When it comes to Canna Cabana, there's this thing called the Canna Cabana Club, more of a subscription style part of HITI's business, and they have approximately 151,000 individuals signed up to the Canna Cabana Club, and 50% of their daily transactions are conducted by club members. So again, but not only are you generating money on a regular basis with this Canna Cabana Club, or whatever you want to call it, but it also incentivizes those individuals to shop solely at High Tide and Canna Cabana. So I really like that subscription style business model, and I like that High Tide is expanding into that and seeing a ton of growth when it comes to these members here. Now, the company, again, completed the acquisition of Fab Nutrition, operating as FAB CBD, for around $20 million US. The company has the option to acquire the remaining 20% over the next 3 years. This is the company that actually manufactures and creates the different CBD products, which will allow High Tide to become a more vertically integrated company and, again, expand margins moving forwards. Again, just not too much. I don't want to kind of just read off of this, as a lot of it is pretty self-explanatory here. But again, uplisting to the NASDAQ after a 15-to-1 share consolidation, getting added to some more ETFs, an elimination of secured debt, opened 3 new stores in Alberta, all great stuff here. But this is one of the most interesting things, and I touched on this just a couple of minutes ago, but throughout the COVID-19 pandemic, all of High Tide's retail locations, or at least a majority of them, faced some sort of restrictions. And in the case of Ontario, it was closed for a majority of the year. I live in Ontario, and we're still not back at a kind of full capacity. A lot of stores are still closed. And as of June 11th, High Tide can open their stores at a 15% capacity. So to see such strong revenue growth at High Tide, along with the fact that a majority of their stores are still closed and limited at a significantly lower capacity than what is normal, that's a big sign and a great sign for High Tide moving into 2022, that not only will they experience organic growth when it comes to their actual physical presence with their obviously retail locations opening more rather, but you're also going to see growth of more capacity. Being able to open up at 100% capacity will allow for more foot traffic and potentially more sales, which is just a great thing across the board. Again, they highlight some of their financials here and whatnot, their net loss, adjusted EBITDA and whatnot. But one of the biggest things I want to point to here, and it's right here, when we take a look at their revenue statement, their income statement, we can see that a majority of their net loss can be attributed to one thing, that's depreciations and amortizations. And when you look at it a little bit deeper, a lot of these expenses are simply from financing activities, interest on their debt, a lot of their their acquisitions that they've been completing over the past couple of months here. So a majority of these are actually just one-time expenses. Again, I think longer term, they will eliminate a majority of their debt, resulting in less expenses on that end. But, I think currently High Tide is in a place where if you eliminate a lot of these one-time expenses, when it comes to a lot of these acquisitions, you have a business that's operating at a slight loss to potentially break even, which is great in my opinion, moving forwards as we open things up. A lot of those COVID-19 related expenses will be diminished significantly, leading to potentially profitability on the bottom line moving into 2022, 2023. And as we kind of become more of a vertically integrated business, I think we will see margin expansion beyond that. So, last thing on High Tide here before we keep going, we have a statement here from High Tide. Just today, High Tide launches new stores in Thunder Bay, Ontario and Lethbridge, Alberta. 2 more stores, continuing to expand their retail presence within Canada. Such a great thing, such a great business. I hold High Tide. It makes up around 7% of my stock market portfolio, at least last time I checked. It's a great business. I'm holding it for the long run. Let me know what you think in the comment section down below. Now, next stock I want to touch on here is the Tattooed Chef. Now, this is a phenomenal company involved in the plant-based food and plant-based meal space. Now, currently they're focusing in on the frozen food aisle, making food that's easy to prepare, frozen, relatively cheap, and easy to make. Now, when we talk about the Tattooed Chef, longer term, they're going to expand into much more than that, into refrigerated, different foods and things along those lines. But when it comes to the Tattooed Chef, they're a company that are growing revenues significantly, expanding their business and product line significantly, have a great management team and a great product at that. So when it comes to the actual business, a lot of great stuff is happening. But one of the biggest kind of growth factors when it comes to the Tattooed Chef is expansion of their retail presence, selling stores in retail locations like Costco, Walmart, Sam's Club, etc. The more stores they get into, the more opportunities that people have to buy the Tattooed Chef's products. And what we've had happen here over the past couple of weeks is the Tattooed Chef expand into Stop and Shop and the Tattooed Chef expand into Kroger's, 2 very large stores. Obviously, just a couple of weeks ago or months ago at this point, we experienced a lot of positivity when it comes to the Tattooed Chef's relationship with Target, expanding their relationship there, increasing the amount of products they have there, officially being the most successful frozen food launch in the history of Target. So when it comes to Stop and Shop and Kroger's, I think over the coming months and over the coming years, these 2 relationships will continue to expand and, drive higher revenue growth when it comes to the Tattooed Chef. And this is a company growing revenue significantly, 50% plus year over year. And in my opinion, that growth will continue over the coming years. So again, the Tattooed Chef is actually my second largest position in my stock market portfolio. Currently makes up around, I want to say 20% of my portfolio at this moment in time. Part of that is in shares. That's actually a majority of it. But then around a quarter of it is in 2023 or January 2023 options at a strike price of around $20. So I believe in the Tattooed Chef over the long run. Great business, executing on a high level. Let me know what you think in the comment section down below. Now, last stock I want to touch on here, and this again is one of my positions, Bigg Digital. This is a company involved in the cryptocurrency space, trading under ticker symbol BBKCF, or if you want to buy on the Canadian Securities Exchange, BIGG.CN. Now, Bigg Digital, again, involved in the cryptocurrency space through 2 main subsidiary brands. First and foremost, Blockchain Intelligence Group. This is focused on the safety and security of cryptocurrencies and the blockchain, being able to track down fraudulent activity within the blockchain through different programming and their Clue software, their BitRank software, etc. But again, being able to track down fraudulent activity within the system. And their next and mainly bigger business is Netcoins, and this is a business involved in the brokerage industry when it comes to cryptocurrencies and digital assets, being able to buy and sell digital assets on the Netcoins platform commission free with a very user-friendly interface. Now, when it comes to Bigg Digital, Netcoins is the main driver of growth when it comes to the actual platform, and I have a bit of an update when it comes to Netcoins, which we'll take a look at in a moment. But Blockchain Intelligence Group, when I look at Bigg Digital, that is almost like the cherry on top. It's the business that, if it succeeds, absolutely phenomenal. But in my opinion, all that needs to succeed for Bigg Digital to thrive as a stock is Netcoins. And now when we look at Bigg Digital, we've seen a lot of positivity when it comes to, or rather when it comes to Blockchain Intelligence Group, we've seen a lot of positivity when it comes to that aspect of their business over the past couple of weeks here. First and foremost, this is an article that came out Monday, June 28th, so actually yesterday. Bigg Digital Assets subsidiary Blockchain Intelligence Group partners with NASDAQ Nordic listed ZineSec. So again, this company, if you want to look at it a little bit deeper, it's involved in identifications and onboarding of customers, know your customer rules and compliances and things along those lines. So to partner with Blockchain Intelligence Group completely makes sense from this perspective. Again, keeping people safe, keeping customers safe, and being able to track fraudulent activity within the cryptocurrency system. So a great partnership on this front. This comes after their roughly $133,000 contract with another corporation. So great to see Blockchain Intelligence Group continuing to expand their network of customers rather. So that's the update here on Blockchain Intelligence Group. When it comes to Netcoins, this right here is very, very interesting. What I have pulled up here is website traffic data for Netcoins. And what we can see here over the past couple of months, roughly since April, we can see website data for Netcoins has continued to rise week after week after week, increasing significantly from where it was back in April. And it has been experiencing a significant increase over the past couple of weeks and throughout June. Now, when you compare this to something like a BitBuy, again, this is one of Netcoin's competitors, we've seen a continued downtrend in their website data. Again, they are bigger, being ranked higher on the kind of website engagement list. But when it comes to Netcoins here, we've seen a continued rise. Now, is this potentially because of their advertising campaign? In my opinion, yes. I have been hearing and watching a lot of Netcoins ads on the radio and whatnot over the past couple of weeks and past couple of months. So it looks to be working. And when it comes to Netcoins, I think we can expect a very good month with June. We should be getting some form of data at the beginning of July. Definitely something to look forward to if you are an investor in Bigg Digital. And just great things happening to Bigg Digital stock, a stock that makes up around 5% of my stock market portfolio. I believe in it. Let me know what you think in the comment section down below. So those are the stocks that I covered in this video here today: HITI, the Tattooed Chef, and Bigg Digital Assets. Let me know what you think about these three in the comment section down below. Which one do you like? Which one do you not like? Thank you all so much for watching, and I'll see you in the next one. Bye.